I want to tell you something the mortgage industry does not do a good job of saying. Your credit score is probably not the reason that you can't buy a home. I talk to first-time buyers every single week who have put their homeownership plans on hold because of the number on a credit report. And most of the time, they didn't need to wait. They were operating on myths that sound like facts, myths that get repeated by people who should know better, myths that are costing people years of equity that they will never get back. Today, I'm going to go through the biggest ones, and by the end of this video, you're going to know exactly where you actually stand, not where you think you stand. I'm Nicole Hamilton. I'm a mortgage broker in New York, and I specialize in first-time home buyers. Let's get into it. Myth number one, you need a 750 credit score to get a mortgage. Nope. Here are the actual numbers. Conventional loan, the standard mortgage, the minimum is 620. That's not 750, that's not 700, 620. An FHA loan, which is specifically designated for first-time home buyers, you can qualify with a score as low as 580 and put just 3.5% down. Let me say that again for the people in the back. A 580 credit score, 3.5% down on $1 million home in New York. That's $35,000, not $200,000, not $100,000, $35,000. Now, a higher score will get you a better interest rate. That part is true. The difference between a 680 score and a 740 score can mean thousands of dollars over the life of the loan. But you can't buy and you could get a better rate are two completely different statements. One is a fact and the other is a myth. Myth number two, and this one genuinely frustrates me. Checking my credit will hurt my score. This myth is keeping people from getting information that they urgently need. Here's the truth. There are two kinds of credit checks. A soft inquiry, which is what happens when you check your own score or when a lender does a preliminary review, does not affect your score at all, zero. A hard inquiry, which happens when you formally apply for a mortgage or a credit card, can drop your score by a few points, usually 5 points or less, and it recovers within a few months. When I pull your credit in our first conversation, that is a soft pull. It does not touch your score. I pull it myself before any lender sees it, so we know exactly what we're working with. There are no surprises and no impact on your score. Please stop avoiding looking at your own credit score because you're afraid of a myth. Go look. The information is free and it will not hurt your score. Myth number three, my score is too low and there's nothing I can do about it quickly. This one has two parts and both of them are wrong. Let's start with the speed question. Credit utilization, meaning how much of your available credit are you using, makes up to 30% of your FICO score, 30%. If you pay down your credit card balances to below 30% of their limit, ideally below 10%, you can see your score move within one billing cycle. That's 30 days. 1 in 5 credit reports contain errors. 1 in 5. If there's an error on yours, an account that isn't yours, a payment marked late that wasn't, disputing it can remove it within 30 to 45 days. For people in the mid 600s, it's realistic to see 20 to 50 points improvement in 60 to 90 days, focusing on just two things: paying down balances and disputing errors. I have had clients come to me with 630 credit scores and close on a home 4 months later, not because they had a miraculous financial transformation, but because they knew exactly what to fix and they fixed it. That's the difference between operating on a myth versus operating on real information. Myth number 4, a lender already told me no, so I'm done. This is the one people most need to hear. Not all lenders are the same. I need you to understand this. Every lender has something called an overlay, their own internal rules that sit on top of official program guidelines. FHA says 580 credit score qualifies, but a specific lender may say, we require 620. That's their overlay. So if that lender told you no, it doesn't mean that you don't qualify for a mortgage. It means that you don't qualify for that lender's version of the rules. As a mortgage broker, I work with multiple lenders. I find the lender whose guidelines best suits your situation. Not the one who happened to be advertising on Google. The median credit score for people who got a mortgage in early 2025 was 772. That number makes people think that I need a 772 credit score. What it actually tells you is that a lot of people with lower scores are not applying because they've been told a myth. One lender's no is not the industry's no. So here's what I want you to walk away with. The question is not, is my credit score good enough? The question is, what does my credit profile actually look like? And what's the fastest path to be where I need to go? Those are two different questions. The first one leads to guessing, and the second leads to a plan. The first thing I do with every first-time home buyer who comes to me, before we talk about neighborhoods, before we talk about price points, is do a soft pull of credit and build that plan. Because sometimes the plan is that you're ready now and you just don't know it. And sometimes the plan is, here are 3 things we need to do within the next 90 days, and then we buy. Either way, you leave the conversation knowing something real, not a myth, not a guess, something you can act on. If you've been sitting on the sidelines because of your credit score, I want you to do one thing after you finish watching this video. Go look at your credit report. Annualcreditreport.com gives you 3 bureaus for free. Once a year, pull it, read it, look for errors. I'm Nicole Hamilton. I make content like this every week for first-time home buyers in New York who want real answers. If this was useful, subscribe and send it to someone who you know has been waiting to buy a home, worried about their credit score. I'll see you in the next one.